Ladies and gentlemen, good afternoon. Welcome to Boulder podcast series. Today we will tackle the topic crypto or digital assets. A lot has been written, a lot has been said, and therefore we're very delighted to have four people on the panel today. We've got Frederike Leeuw and Jan Muiselaar from Amdax. Amdax is a well-known institution in the Netherlands that provides digital asset services to those parties active in the digital asset industry. Amdax basically is a digital platform. They were incorporated in 2019, and since 2023 they also licensed themselves and registered to the Dutch Central Bank, which is something very important nowadays with the increasing regulatory society where we live in. Amdax is interesting because both Jan and Frederike, they will talk about it themselves. They have a track record within the traditional banking industry, so they can elaborate a little bit on how Amdax has filled the gaps between traditional banks and the need of people active in the digital asset industry. So besides these two representatives who are very welcome today, we also have two panel members from our own Boulder. We've got Mustafa Kadir, he's our Head of Fund Solutions Digital, and Devin Spoor, Digital Assets Lead or Specialist or Manager. I would like to start off with a question first addressed to Mustafa and Devin. For people like me that are not so knowledgeable about this industry, can you elaborate a little bit more about crypto digital assets? Because I read about NFTs, tokens, crypto coins, etc. But when did this industry actually started?
Thanks for having me, Jeroen, and happy to take this first question. So for me, it's always important to try to distinguish basically two types of generations, right? So the first type of crypto generation I would basically describe as the simple, quote unquote, digital currencies like Bitcoin that transfer value. But then afterwards, there was a second generation, which defined the industry itself. And those are basically characterized by smart contracts. So that's more than just the digital money as Bitcoin. And this actually kickstarted the Web3 industry and DeFi, which is really interesting for institutions. So that was actually started the industry. And I believe due to the development of smart contracts, a lot of other people actually got involved, right? But that brings me to what are digital assets. And I always basically try to explain, as already mentioned, digital assets have different functions, right? I'm not here to lecture about what are currencies or some tokens can be used for access or they actually represent a real world asset. But there's a lot of learning to be done here, right? But what ties them together is each crypto basically captures something of value, whatever that might be, right? And it moves using blockchain technology as the underlying infrastructure, right? And the collective noun of all cryptos would be digital assets.
Maybe I could just add a little bit to that, technology moves fast, and every so many years, in a decade or two, we see how things kind of evolve. To our convenience and the betterment of the society. I think some of us on this call may remember, checks being written and kind of flying around the country. That's not the case anymore. We have digital money in our pockets with the plastic cards. So the next iteration of technology is, these digital assets, but also the programmability that it comes with.
Yeah, thank you, Mustafa. Yeah, and correct. It's an evolution of technology, and I've got the feeling it's going faster and faster every day. So when you discuss, digital assets, again, for people that have limited knowledge, we all think about, crypto, Bitcoin, or maybe Ethereum, etc. But since Trump also, launched his coin, a lot of people are wondering, is it that easy? How many coins are there, currently really in this whole industry, active? So maybe you can give us a little bit some insights on that topic.
Basically, Bitcoin was the first public blockchain that came up with this idea of like a digital public ledger that's immutable, transparent, fully audited. So I think it really revolutionized the sort of the space itself. And obviously after that, you have other names. You have Ethereum that came up with the programmability and the smart contracts and the dApps. There are other names. There's obviously Solana, Avalanche. There is Polygon, and there's also sort of the differentiation between what a token would be and what a coin would be. Obviously, this can then get quite interesting and deeper with the sort of the rise of the meme coins, which is another angle on things. I think I would refrain from sort of any sort of investment advice here, but I would say that the underlying technology is very powerful. And there are a lot of use cases, especially if you also factor in the stable coins. Devin, I don't know if you being sort of more in the space in the industry have a more positive outlook about that or view.
I believe you're totally right. And, everything has different value, right? So with the Trump coin, like you mentioned, Jeroen, people actually saw that you can create value yourself, but it can also be applied to different things, right? And I'm basically mostly looking forward to actually the real world asset or other financial products that will come on chain, like yield bearing products or all these other type of things that will happen in the future, including tokenization, right? So basically using blockchain as underlying infrastructure and not speculating too much on, self-created meme coins or other type of things. So yeah.
That's very clear. Thank you, Devin, Mustafa. And I think that's a very good bridge because, as you just said, with the launch of different coins, and you said that's important. The technology, underwrites it, makes it sustainable. I think that for Frederica and Jan maybe is also, it's a question like, okay, how do institutions deal with this? Traditionally, what is their view? Because you both have worked in the traditional banking industry. So how are they seeing this development? And can you also maybe tell us a little bit if this has changed the last couple of years, how they refer, to this, ever upcoming stream of digital assets?
Yeah. It's a good question because institutions have approached crypto, and then I speak about crypto, not digital assets, along with hesitation. And in its early days, what you're also reading, crypto was strongly associated with criminal activities, money laundering, and anonymous transactions on unregulated platforms. And on top of that, also the market was extremely volatile and largely driven by speculation. And at that time, also in the past, the necessary institutional framework was still underdeveloped, actually. No clear regulatory frameworks, minimal oversight, and an underdeveloped infrastructure that made responsible participation for professional investors difficult, maybe if not impossible. And we see now that all that is it's starting to shift. And I think there are three key drivers behind that change. And first of all, the regulation is catching up. In Europe, MiCAR is an important step, European Crypto Asset Regulation, that's MiCAR. And it provides a clear regulatory framework that enables institutions to participate in a structured and compliant way. And if we look at the US, for example, last year in 2024, the spot Bitcoin ETF has approved. I think it's a key milestone. And that gives institutions a familiar vehicle to access crypto. And what we now also see is that we are seeing the shift is going on from just enforcement and fines to actually building proper rules and structures. And for example, stablecoins are starting to get a legal recognition over there. And also regulators like the SEC and the CFTC, they are also working more closely together. So regulation is catching up. So that's a key driver. And then secondly, the infrastructure has matured. So more and more institutions have institutional grade infrastructure in place. and also make use of risk controls and compliance tools, things that institutions expect as a standard. And that reduces, of course, operational risk and also makes crypto more accessible. So then the third key driver, I would say, is the wave of validation from major players. When large asset managers are coming in, global banks starting engaging with crypto, not just talking about crypto, but really building and investing, and that changes the perception. So to be fair, crypto still is still be seen by by many, I would say, as high risk asset class, and I think it's not entirely wrong. I think it's correct, but that said, institutions are starting to recognize the other side of the coin. So the potential as a diversifier, but also as a building block of the future financial infrastructure.
Okay, yeah, that makes very well sense. And it's funny how you describe this, because basically what happens is that institutions are implementing an ecosystem which is applicable for the traditional, let's say, currencies. So basically, they're building this, to make it more accessible, for players, but also to create this whole regulatory certainty. So maybe that makes very much sense. Thank you very much, Vedic. And maybe that's also a good bridge, because then, what are then you think the trends in this industry, and what type of institutional changes have led, let's say, to growing maturity and also acceptance. So as you just said, because we get now more used to the idea, there's more regulation, but maybe you can speak a little bit more about that, Jan, Frederica.
Yeah, maybe I can say something about it. So like Frederica said, especially the clarity in regulation, but also like she said, the launch of a Bitcoin ETF was a huge catalyst for the growth of crypto. I mean, until that time, you had you had some ETPs, some ETNs, also by some mid-level ETF providers, but the acceptance of a huge party like BlackRock really moved the needle. And I think that is something a trend that we'll see continuing. So I think you will see an expansion in the offering of ETN providers, asset managers, and fund houses. So that is one. I also think that you will see further development in the way that clients and potential clients will go about custody, how the industry views custody. So we now have some players, and I think that will keep on growing. And I think that the bar for what custody is and how it should be done will be set much higher in the coming months and years. I also think that this expansion of derivative trading will go on. I think that the trading of perpetuals is something that is really large already on things like Bitcoin, but that will be growing into the coming months as the whole ecosystem grows. And I think what you also see is a growth in tokenization. I think Devin already mentioned it. There are some estimations that in the coming years, tokenization in Europe alone will become a 4.5 trillion euro market. And I mean, that in itself will mean that from now until then, there will be a lot of growth in that whole ecosystem. What you also see with the maturing of a sector is that you see some consolidation. So recently we saw Coinbase buying Deribit, but we also see Ripple making moves. They're buying a lot of providers and cost and infrastructure providers. And I think that is something that will continue until you have some major players, maybe together with some more bespoke boutique end-to-end companies that will sort of divide the market. And I think that's something that we have seen in traditional finance over the last decades. And I think that's something that we will see now in crypto or in digital assets. So a lot of moving parts, which I think are natural for a sector in development. what we also see is that client demand is growing. So that was all on the supply side. You also have a demand side, and what you see now is there have been some especially with investors, some questions about bonds, about U.S. Treasuries. I mean, nation states and debtors will remain large buyers, but people who are investing for just to get a return, they're now also turning more to crypto as for instance, Bitcoin has become a $2 trillion asset, and a lot has been said about how it can enhance portfolios, and we also see that validated from the sector itself. So last month there was a great report that came out of Luxembourg, which I always find is a nice proxy for how the sector looks, because it's such a center of excellence for financial institutions around Europe. And one of the interesting findings was that 81% of all asset managers there found crypto assets important for the future of asset management. And I think that in itself is really important for the sector. But what's also really important for the sector was when they did this survey 2 years ago, 90%, 44% of the respondents found crypto a niche asset. And that was pretty big. And that now has come down to 90%. So that says a lot of how the industry itself also perceive crypto and digital assets. And I think that also comes down from demand from clients that are saying, hey, we think this is a viable asset. We want you to take this into account. And I think that is very important for the overall growth in itself.
I think, and that is an important thing you've mentioned. I think also the players like Amdax also create some trust. You've got professionals, and then you see also that's not just the public, but also from the various sides and the playing field that parties like Amdax are essential, to embrace, let's say, that this maturity. There are a lot of misconceptions, when you talk with institutions regarding this industry. Can you elaborate on this one, Devin or Mustafa or both?
Thank you for your point, Jan. I think the bond market was a very interesting point that you touched. And I'll basically build a bridge from there, right? Because I feel like, back in the days, treasury bills or the bond market was basically regarded as a risk-free return. And actually, if you look at the current developments in the market, investors are starting to price in a possible default of certain nation states because of high debt GDP ratio, right? So therefore, I see institutionals are buying Bitcoin basically more as an uncertainty against, or basically a hedge against uncertainty, right? And the gold trade is very crowded right now. So Bitcoin is slowly more accepted as kind of a hedge. And we slowly start to understand the other possibilities of crypto, like financial engineering. So to build the bridge to the misconceptions, Jeroen, a long time people actually thought, okay, crypto has no underlying value. But it's only how you regard it, right? It comes more to a philosophical question, as some people think that crypto is basically the sum of a speculative gamble. But what do we think actually has value, right? I think it's very subjective, so to say, because fiat money that we use only has value because we all believe it has value, or because the government basically says you must accept it, right? So nowadays people also think that Bitcoin has value because basically we believe in the underlying technology. So it's not a sense of whether it has value, it's more like whether we agree something has value. And if everyone does, at some point, you can actually see it, right? So that's one of the biggest misconceptions, is crypto has no value. And I've already talked about, other cryptos having different functions with different type of values, right? And I think the second misconception would be that crypto is about fraud or money laundering. And essentially with crypto, you can avoid banks to a certain stage, but using a public ledger is definitely not advantageous for criminals, right? Because you can basically track every point in or every transaction going forward using that public key. So I wouldn't say it's used for money laundering a lot. You can also freeze funds on centralized exchanges, which you can see with the Lazarus hack. Essentially, Bybit was hacked by North Korean hackers, and we are really trying as an industry to get those funds back, right? So it's actually not really advantageous for criminals, so to say. And that also brings to me, like, I've recently organized hackathon during, Dutch Blockchain Week. And there we actually tried to build solutions that prevent fraud by using AI agents. And I'm just saying in time it will become quite the opposite, because this new technology also brings in new opportunities. And I think at some point institutions and everyone will start learn why, what's all possible. And at that point, adoption would also be increasing.
I think what has happened is that, obviously, as we were talking earlier, that the technological revolution or things evolving. So there's a lot of technology behind the scenes. So I think for a common person, sometimes the amount of technology there is, and then what it means to them, and how does this translate into an asset class, could be quite overwhelming, or sometimes, to be honest, very confusing, right? Especially if you even get into centralized finance and DeFi, and just kind of holding some tokens at an exchange.
Exactly.
Yep. So I think there are a couple of things which are happening in parallel, which I think would help. Sort of more and more, sort of regulatory clarity coming into sort of like the normal realm of things and lives that we all live. Where also investors getting some protections. Some of these sort of funds are like big names coming into digital assets, like the custody of BNY, BlackRock itself also helps increase the investors' confidence. But really, I think it's customers kind of understanding what this newer, or investors, I should say, understanding what this newer technology means, not falling for, a get-rich-quick scam at times. Unfortunately, that does happen with some meme coins or some things that come very quickly, but then also vanish or disappear very quickly. Also, looking at the track record, I think the sort of the research, or sort of the due diligence for an investor is the same, which would be for stocks or other asset classes. It's just going through its phase of maturing, and things becoming more clear to the investors. It was interesting. I was reading somewhere historically, because that even there was a time that stock trading was not allowed, and it was seen too risky, or people just not understanding it. So yeah, so Jeroen, I think with the regulatory landscape changing, investors doing more due diligence on their own end, information becoming more available and clear, and perhaps sometimes just following the most known and common, and the names, or the path is the way to go, rather than getting sort of too excited and get into things that you don't understand.
That's okay, exactly. What is then interesting is that, yeah, there seems to be like that the institutions need to pave the way, by implementing what Frederica and Jan also said, the regulatory frameworks for the audience. Then the public tend to embrace as well. Thank you, very clear. Frederica, Jan. So having listened to this, it looks bright, right? I mean, because we have turned some corners, I think, with the digital asset industry. So can you elaborate a little bit and look in your crystal ball what the future outlook will be of this industry within the larger, financial landscape?
Yeah, I think it looks pretty good, right? If you look at today's investment landscape, crypto still plays quite a limited role in the traditional portfolios. To be fair, so but it's starting to shift. And what I mentioned, as regulation improves and infrastructure matures, institutional investors are starting to seriously consider crypto. And they recognize that crypto can add value because it offers a different risk-return profile compared to the other traditional asset classes. And what's also helping is that there are clients asking for it, especially the younger generation. So that's so I think that's also important. And it's also a point that Jan already addressed. What we also see in the future, the market is consolidating, and that will not stop. only well-regulated, transparent players with strong infrastructure, they will remain relevant. And it's a healthy development, creates trust and stability, and also better for the institutional adoption. And another thing is, it's also something what we addressed in our white paper, is that traditional finance and crypto, they are moving towards each other. Crypto native firms going through the process of becoming more institutional, applying for MiFID licenses, aligning with institutional compliance standards. And meanwhile, we have also traditional institutions are stepping into the space, building their own infrastructure, like crypto custody, what already was mentioned, and also tokenized platforms. So that's also what we see, and also for the future that will grow in each other, and it will also not, what we also discussed, it will not be about crypto anymore in a narrow sense. We're seeing a lot of movement around tokenized assets, like bonds and money market funds issued on chain, and especially fixed income, where tokenization really can offer efficiency, faster settlement. It will be cheaper then, create more transparency. So, and then we have also stable coins also playing a key role, and that will also something once only used within crypto, and more larger financial institutions are testing how they can use stablecoins in their daily operations. So that is also something what we will see more and more. But still, regulation is the key enabler. So MiCA is a good step in Europe, but we also need to align with other frameworks like UCITS and also MiFID, especially if we want to tokenize assets to truly fit into regulated fund structures.
Boulder themselves also very active with crypto funds, etc. How do you see that, with the multi-asset class funds, etc.? How do you see crypto playing a role in that?
Yeah, like what I mentioned. So at the moment, crypto still plays a very limited role in a traditional portfolio. So also in multi-asset funds, and a part again has to do with regulation. And under UCITS, which governs most public investment funds in Europe, crypto assets are not yet approved as eligible investments, and that makes it also a direct allocation also difficult for asset managers. And what we see under the AIFMD, there are also challenges because there's a lack of depositories willing or able to support crypto, and that adds another barrier. So, but the interest is growing from managers, from clients. And as the regulation evolves, including the broader implementation of MiCA, potentially updated usage guidance in the future, we expect more room to emerge for crypto within regulated fund structures. So I think we are still early, but the building blocks are putting into place. And once the regulatory doors opens further, we believe crypto will gradually find its way also in a multi-asset fund space.
Yeah, no, I definitely agree. This is unstoppable. It's a trend. It's unstoppable. Yeah. Thank you so much, all. Then I think for my final question, because Amdax and Boulder, work together, have created a strategic alliance, as we call it in the industry. So can you maybe shortly also emphasize how both Amdax and Boulder, can what is the added value of this alliance, and what can it do for potential investors in this industry?
Yeah, maybe I can say something about that, and maybe also a little bit on the back of what Friederike has said about that there still is a need for regulatory clarity. I also see there's still some missed opportunity, and that's also where Amdax and Boulder can assist. But I think a lot of financial institutions, whether they're really big or really small, are also looking a bit at each other. So this year we brought out a white paper about the added value of Bitcoin into a traditional 60-40 portfolio, and how that would positively affect the risk-adjusted returns. And not only we have done that, but also BlackRock have done that, Van Eck have done that. And I think there's consensus within the whole industry that a multi-asset strategy with Bitcoin, whether it be 5 or 10 or 13%, would be beneficial. And still no major player has made a move. And I think on one hand, that's in some cases more dogmatic thinking towards crypto, but in other scenarios, it's nobody wants to be first. Everybody wants to be second, because if you're first, then you're taking a risk. And if you're third, then you're late. And if you're second, you're just in time. And I think that also leaves a lot of room for multi-asset fund managers to make their name, because you can have a first mover advantage. And I think that's also that we can help those clients with, because we do have the knowledge of the traditional industry. I mean, Boulder has also, next to digital assets, a big track record in managing traditional funds. At Amdax, we have a lot of experience with digital asset custody, and also, in this case, Bitcoin. And I think the combination offers like a one-stop solution for asset managers. And I think we already have done some cases together that have proven that. I mean, where Boulder, you guys bring your experience on the fund administrative business. You have experience also with digital assets, and we have our crypto knowledge, and especially the infrastructure. And I think that if you want to make a move in the multi-asset fund space or in any other digital asset fund space, I think, together, I think we can streamline the complexity of launching that type of fund very, very well.
That was very explicit, and I was listening intensively, very explicit, and I think you covered it all. I think nothing to add, and I think this brings us to the end of this very interesting podcast. I would like to thank you, Frederike, Head of Institutional Clients, Amdax, Jan, Head of Sales, but also with a nice track in the private client business. Thank you both, and of course, my colleagues Mustafa and Devin, and looking forward to talking to you again. Thank you very much.